Well, without getting into all of the details, 2023 was not exactly a great year for real estate. We saw sales hit the lowest numbers in over 20 years, interest rates touched 8% at one point, and affordability hit historic lows as interest rates went up, but prices held steady because of really low inventory. But there is good news ahead, and it looks like good things are in store for 2024, at least for the housing market. In this video, I'll be putting on my data analytics hat and going through a ton of different data and sharing my predictions for the 2024 housing market, and specifically in Oregon. Now, I think it's important to note that I'm not an economist, but I'm sharing a lot of data that other economists have gone through, and there are some things that I kind of pulled out that other people haven't mentioned. So we'll see what's in store for 2024. Most economists were thinking that interest rates were going to come down to like 5 or 6% in 2023. And now they're just essentially saying the same thing for 2024. There are definitely some major points you won't want to miss. So let's go ahead and get started. So first up for market news is interest rates. Interest rates really have been the main topic of conversation for 2023 and really for the past 2 years. A lot of people thought that the market was going to crash because of interest rates going up so high. People thought the economy was going to tank and that the housing market was just going to basically be a dumpster fire. Now, there were pricing corrections. As you can see here, there were some states where prices went down and most states did not see a huge increase in prices. I knew that Oregon real estate was not going to crash because inventory is so low. And we'll be talking a bit about that, how we have this chronic inventory problem. However, even though the good predictions were that real estate was going to steadily move up and not crash, no one predicted that rates were going to get to 8% at one point. So that was definitely unexpected. Thankfully, though, rates have been coming back down. When this video is recorded towards the end of December, rates were already below 7%. This graph from Freddie Mac is showing that rates are down just slightly below 7%. If you're new to the channel, my name is Daniel Roberts. I'm the principal broker of the Joyful Roberts Real Estate Group. And this is the Living in Newberg channel. So we cover all things about living in Newberg and also about real estate. If you're looking at moving to Newberg or you need to sell a home, reach out to us and we will take care of you. We love helping people move to Newberg. And if you're selling, we can actually market your home on this channel. So that's one of the cool things that we do is we HGTV style tour, show that off, and then market it to people who are actually going to be interested in buying your home. So if that's something you're interested in, feel free to reach out to us and we can talk about that. So that said, what's ahead for 2024? Well, as always, there's a bit of a range in predictions. And like I said, for 2023, most of those predictions were wrong anyway. However, I still think it's important to know what the best economists are saying. So most of the best guesses are putting interest rates by the end of 2024 at just below 6% or maybe even up to 6.5%. This is likely going to be gradual throughout the years. So we'll likely see rates come down slowly, as you can see in this graph, and then things will kind of level off towards the end of the year. Either rates will stay fairly level, or we may even see rates get below 6% in the first half of the year. My guess is we'll probably see rates somewhere in the 6.5% range sometime in the spring, and then below 6% sometime in the fall. All right, next up is inventory. So other than interest rates, inventory has been the main topic of conversation. This is something I've been talking about for a really long time, is that we just don't have enough homes being built. On this graph, you can see from 2000 to 2005, builders were essentially going all out, building as much as they can before realizing that the market was going to crash. And then once builders stopped, they stayed at really low levels for a long time. And just when we started to see things pick back up again after COVID, in 2023, builders really stopped because it was really expensive to build homes affordably because of interest rates, labor costs, material costs. So we started to see housing production go down. Thankfully, we're starting to see housing production go back up. But here's another way to look at this. So for 14 years, builders didn't construct enough homes, and that caused a long-term shortage of homes. And even though we're getting back to the historical levels, we're nowhere near where we need to be. Here's the main reason this is an issue. New homes are needed for new families. As people move out of their parents' house, either decide to rent or buy, there needs to be new spaces that weren't there originally. Now, if population were exactly the same and there were enough people moving away or downsizing or dying, then there'd be enough space from the people vacating for the people to move in. But that's not what we're seeing. And this is about to get much worse. What this graph here is showing is that in 2020, there was a huge bubble of millennials in the 25 to 32 year range. The median home buying age was 34 years old. So that means that 4 years later, these same people are between the ages of 29 and 36. And by the way, 36 is pretty much the new median home buying age. So in other words, in the next few years, we're going to be seeing a few 100,000 more people per year that are going to need to buy homes than has happened before. Now, while the baby boomer population is still pretty big, there's way more people in that first-time home buying stage that are beginning to look for homes. So we're going to see a lot more people looking for homes, and we're going to see inventory that just can't support the population, meaning prices are going to go up. For Oregon, this situation is pretty similar. This is saying pretty much the same thing. So median home buying age right around that 35, 36 range. And then there's a lot of people from that like 27 to 33-year-old range that are getting ready to buy homes. So now those people that were 30 to 34 are all 32 to 36. There's going to be a lot of people getting ready to buy homes this year. This is the simple, basic economic fact of supply and demand. More demand, not enough supply, prices will probably go up, which we'll talk about in just a second. The other issue we're seeing is the rate lock-in effect. So even when rates come down to 6%, they'll still be higher than 85% of mortgages. And 2/3 of all mortgages are less than 4%. So people aren't going to move unless they really have to. Still, mortgage rates in the 6.5% to 7% range, or maybe in the sub 6% range, are better than rates at 7 and 8%. So even though there's not going to be a ton of activity all at once, we'll still see more activity than we did in 2023. All right, now let's talk about actual sales. In 2023, we saw about 26% less sales than we did in 2022. So in the Portland metro area, this was 19,500 roughly, down from 26,000. So about 7,000 homes less were sold through November than in 2022. All of these people still wanted to buy homes. It doesn't mean that all of a sudden there were way less people who wanted homes. It was just people couldn't afford the homes because of high interest rates. So now a lot of these same people who have been saving money for the past year are all likely going to come into the market around the same time. So what is this going to do for prices? Well, again, the fact that prices didn't drop by 30% when interest rates went from 3% to 8% shows that we have a major inventory issue. So what happens when rates go from 8% down to 6.5% or 6%? It means that all of a sudden homes just got a lot more affordable than they have been in 2023. So as rates come down, a lot of the buyers that have been on the sidelines in 2023 are going to come into the market, and sellers who've been holding off selling because it just wasn't affordable for them to do so will begin to sell their homes as life changes are just forcing them to do so. So people have been really holding out, and we're probably going to see people that just can't take it anymore. They really need that bigger home, or they really just need to move for a job or whatever. We'll see a lot of those people start to move as well. Prices are also cyclical, and you can see in this graph that in the winter, prices come down a little bit and then they go up in the spring. This has been really pronounced over the past several years, and you can see that even last year, prices came down at the end of 2022 and then sharply back up in 2023. A lot of the appreciation happens during the spring. That's like the prime time when a lot of buyers are wanting to get into the market, and most sellers haven't listed yet. So that's when there's bidding wars, there's a lot of appreciation all at once. Now, if we're seeing this normal cyclical pattern happen, compounded with interest rates being lower, then it could mean bidding wars. So unfortunately, I'm predicting that this spring, between maybe end of February and June, we're going to start seeing more bidding wars on homes in Oregon. The best predictions for appreciation is about 5 to 6%. Now, in my county of Yamhill County, the median home price is about $487,000. So if we see appreciation at about 5.7% per year, that means in just 5 years, we'll see the median home price go over $600,000, which that feels really crazy. But when you look at a decade ago, the median home price was only like $250,000. And 5.7% may seem like a lot, but when you look at the historical data for our area, the 63-year average is 5%, and the 10-year average is over 7%. The 5.7% actually isn't that much for our area, even though it feels like a lot. One last thing that's likely going to heat up the Oregon housing market is the Oregon tax kicker. Essentially, Oregon runs a 2-year budget, and from 2021 to 2023, they underestimated how much they were going to get in taxes. So essentially, they said, hey, we think we'll get this much, and they ended up getting way more because of inflation and increased wages. And by Oregon law, all of that extra money goes back to the taxpayer. So for this year, it's going to be $5.6 billion, which is more than they've ever seen before. What that means for taxpayers is that each taxpayer is going to get 44% back of what they paid for Oregon taxes. So if you paid $10,000 for your Oregon taxes in 2022, that means you're going to get $4,400 back. So this extra income is really going to make it more affordable for people to buy those homes. So people have been saving up for a down payment. They all of a sudden have this extra money from the kicker. That means that they're going to be able to buy a home that much sooner. So I don't know exactly how this is going to affect things. Most people aren't getting enough money for it to make a huge difference, but I think it'll at least make some difference. Well, if you're in the market to buy a home or sell a home, you want advice about timing, you want a team who's going to serve you and get the job done right, then reach out to us. You can call us, email us, whichever is easiest for you. We also have comprehensive buyer guides and seller guides that walk you through every step of the process, and you can find those on our website, and they're also linked in the description below. Well, I know this was a ton of data, but trust me, this is just the tip of the iceberg. If you have more questions about this and really are wondering what the market's going to do or wondering if now's a good time to buy or sell, please reach out to me. I'd be happy to talk with you about it. And feel free to leave your thoughts of what you think is going to happen in 2024 for Oregon's housing market. Well, if you found this video helpful, give it a like and feel free to subscribe to our channel and leave a comment below. There's also a couple other videos on the screen about Newberg, and so feel free to check one of those out, and I'll catch you in the next video.